We are now above 19% institutional ownership. I want to go over the new filings today, along with substantiating my claim that earnings was good, because not only is this the most important thing, but also because there's something that I wasn't really talking about right after earnings happened, because I didn't know about it. So I've actually got the quote for you today, and we're going to go over some of yet another reason to prove that the reaction was an overreaction and a fixation on the expenses. And it's actually not as bad. And how much money we lost on the quarter. We lost $30 million in quarter two. A very sizable portion of that was because of a debt repayment that we're going to go over. And that's the article that actually the quote is from. Also, besides that, there's not any other crazy news today, but also the jobs and what our pace of hiring is going to be for the next few quarters. There was a quote that was in the earnings report as well. And I wanted to say, there's some comments today that I saw talking about Brandon. Bionano hasn't really made any progress this year. Why should we be valued at $6 when last year we were at 50 cents? Why should we be there? And I'm going to tell you the number one reason why. And please, if you're not going to watch anything else, watch what I'm going to say about the revenue and what we're on track for this year compared to how that stacks up on the last years. If you're worried about if you think this company's not making any progress, just watch that part, please. And also the profit. I want to tell you, and I want to actually give you. Actually, at the start here, I'm going to give you the Illumina, the potential trajectory for Bionano the next 2 decades or 20 years. I'm going to give you the possible trajectory there if the Sapphire were to be successful. I can't predict the future. Of course, I'm going to say if, because I'm not going to be dogmatic. I don't like dogmatic people, dogmatic statements. I don't like those. So what I'll say here for the first little thing we're going to cover here. And we're going to do some technical analysis in the portfolio showcase, of course. But if we were to be successful, let's maximize the chart. If Bionano were to be good, how much would we go up? Well, we would be going up several thousand%. We would probably be going up 5,000 to 10,000% in a 2-decade time span if the Sapphire and Nano Nozzle are both going to get super mainstream adoption. But let's just say we're going to be relatively successful down the line, 10 years from now. What you could certainly be seeing, and I know the years are a little bit, let's just say right now is 2003, right? I think this is actually somewhat of an accurate, this is kind of what, like if this was actually 2021 instead of 2003 here, this is Illumina's here, this could easily be our stop price. And the reason why I say this is not just because I think we're going to do good long term, but because the revenue looks exactly like this chart, which it would be an exponential increase, right? The curve is slowly increasing and then you start going straight up. That's called an exponential increase. Exponential curve, man. And that is what the revenue and the analysts are projecting actually for us. And that is a potential, I think that's what the future holds, to be honest with you. I think that's what it holds. 10, 20 years down the line, that is what you're going to be looking at. Are you going to risk timing that, or are you going to get as many shares as you can in the days that we're going down so you can make and beat the market long term? That's as simple as it gets. That's what the question that you have to ask yourself when you're contemplating whether you should continue holding BNGO and adding or not selling anything right now. Now, the institutional ownership, you're over 19%. You got 53 million shares held by institutions, 164 total that are, and 151 of those 164, they are long only, which means they only hold shares or a call. And then you got only five institutions that are just plain shorting. God bless the souls of those people. Anyways, the new filings today. You've got Rockefeller selling out. Oh no, how many shares do they have? How many shares? 400 shares. A mind-blowing 400 shares. What about the other institution that's selling out? What do they got? 384. I don't understand why all those institutions with low shares are selling out recently. And they're remember, of course, the file day is not indicative of the transaction day, yada yada. But if you look, there's a clear trend. People are buying and holding. And look at the prices. This is what's key, man. Look at this. Almost everything is in the 7s, and these guys are holding hundreds of thousands of shares right now. To our knowledge, man, that's as simple as it gets. That's better than selling and institutional ownership continuing to go higher. You want to say Bionano is held by retail mostly? That's true, but you can't deny the fact that institutions have been buying the dip in a crazy way with averages in the 7s, 6s, 5s, 8s, 10s, right? Institutions are holding this stuff. They're holding on for dear life. I mean, they're not even holding on for dear life. They're holding no matter what, it seems like. Because we've gone down, we've gone up. You guys know what the price has done. Okay, I'm sure if you're watching this video, they are holding, and that's the clear trend, and that's obviously way more bullish than bearish. I know it's not a very complicated takeaway, but it's better than institutions actually selling out and having the institutions selling a fair amount of shares instead of the 400 shares and 384 shares. Now, going on to the earnings, this is way more important than the institutional ownership for the day. What I'll say here is that $17 million, now you may be wondering, Brandon, what is this Google Doc? You might have just typed this yourself. This could be bullshit. If you think I'm bullshitting you, go to this article right here. I can't actually look at the article itself because it'll kick me out because I'm not subscribed to Seeking Alpha or whatever. Okay, I copy and paste this. I just Control-A'd real quick. I just did a Control-A and then I copy and pasted it. And one of the key things here is that it mentions a $17 million debt repayment. And if you just calculate the numbers, you may be wondering, well, maybe this guy doesn't have reliable information. Is this a reliable source? I would say it's a somewhat reliable source, right? It's just a random analyst, but no one has critiqued this, and this guy does have, although I don't really like his extrapolations, he does have some good information, right? Not good conclusions, but he has some good, he knows some stuff. And if you actually do the math here, $17 million, we lost $30 million during the quarter. We made $4 million, basically, in revenue. And then we lost $17 million for the debt repayment, and then we had $17 million in operating expenses, right? So that's your OPEX. And this is the debt, right? So that's 34 minus 4, because 4 is what you're making, or however you want to do the math. It comes out to a loss of about $30 million. It makes perfect sense. So ape language, what I'm telling you is that yes, the EPS was bad. Yes, we had a bad EPS miss. That is because we had a one-time $17 million debt repayment along with a $1.5 million payment for the stock options incentivizing the employees to work. And then you also had the $4 million in increased headcount related expenses, which was the 37 people we hired in quarter 2. What I'm trying to tell you is that the expenses in the EPS miss is so damn misleading because debt repayment, increasing your headcount, smartly adding employees like Richard Shippey, like Jason Pryor, those great freaking very highly credentialed and auspicious members of the team, I would say, of the C-suite now. Adding these people, and then the $1.5 million in the stock options. These are all one-time things, relatively. Okay, the expenses, that's a little bit different, but they're all good things. And then none of these things should make you think we shouldn't go up after earnings, because when you factor in, we got a 226% year-over-year total revenue growth plus the like 10 to 15% revenue beats. And all the other things that we got, right? The LDTs, the CLI lab, everything else that they said, the gross margin increase, all the great things we got on earnings, people are willing to negate all that, neglect all that shit, and just hyperfixate and only care about the expense and the EPS miss. That just tells you, if you do the research on this earnings report, you will know we should have gone up a couple percent after earnings, and we didn't. This is the day of earnings, right here. This is the day. We went down in the after hours. We went down. After hours, earnings came out. People didn't like it. They thought it was sucky. Okay, we went up a ton the next day. Yeah, I know. That wasn't because of earnings, though. Everything in the stock market skyrocketed on this day, including the genomic sector, Illumina, PacBio. Everything was up double digits almost. Bionano went up like 6%. We followed suit. That does not mean that earnings has been priced in. No. People have, I don't know if this is manipulation, but the more I research this, the more I look into earnings, the more times I read the highlights here and put the pieces together, like we just did with the little figure we did with the $30 million and everything. It's better and better. Earnings, the more I reflect, the more time I have to process the earnings, the more I think this was a kick-ass earnings. This wasn't just good. This was almost, I don't know if this is great, but it's nearing great, right? It's closer to great than average or as you expected, in my opinion. And for the reasons that we just said, right? We got an EPS miss. We would have got a way bigger beat if we didn't have all these one-time payments. That's as simple as it gets. Our net income in quarter 2 was not as good as usual because we had to use so much of our cash for the debt repayment and the increased expenses through the headcount additions and the stock options, man. So that's what I'll leave you with there. Now, talking about the additions in our staff that I was just talking about, literally, this is going to continue. I just wanted to remind everybody that we're going to continue hiring people left and right. We hired 37 people in quarter 2. Management said that is going to continue, but not quite at that pace. So basically, probably we're going to be hiring, we're going to be hiring less than 37 people in the year in this year, in the quarters to come this year, quarter 3, quarter 4, probably, right? Something like that. We're going to be hiring, 10 to 30, maybe 10 to 25, somewhere in that range. We're going to be hiring, and that is a great sign for a healthy, and not only healthy, but strong and growing business. That shows you robust growth right there, man. That's as simple as it gets. When you augment your staff and your employee count, there's more work that is being done. Unless you're just hiring, unless you're literally just saying, all right, anyone want a job, just come here and sit for 8 hours and you'll get paid. As long as they're not doing that, it's good. It's a great thing to know. And it's great to know and understand and look at these things and spend time actually doing the research here on days like this when the stock price is going down for no reason. So you can know, yes, we're going down right now. The company's only getting better though. That's all you know, man. And also, okay, this is it. This is it. Revenue. All right, now you can watch the video over the weekend. I went over this much more in depth. But right now, I'm just going to say for the revenue for 2021, right now we have about 7 million. If you combine quarter 2 and quarter 1, we have almost 7 million on the quarter. We actually have over 7 million technically, according to Bionano. Over 7 million. 2020, we only had 8.5 million for the entire year. So for 2 quarters, we already almost have matched what we got the entire last year. For 2019 and for 2018, 2017, all of them were already on track. We're on track to beat all of them by a very significant amount. If that doesn't tell you that the company, if that doesn't give you confidence in what the company's been doing this year, I don't know what will. That's as simple as it gets. All right, now these numbers right here, I wanted to give you a figure and how much we would go up if we were to get 1 billion in profit in 2030. So according to an article, I'm not smart enough to do this math, so I'm getting this number off someone else. But if the stock price were to go to $60 to $120 or $60 to $120, $60, that's going to be about 900% increase from where we are right now, roughly. If we were to go to $120, that's going to be about almost 2,000% in the green, of course. So if we were to be making $1 billion, or not even 1 billion, but 800 million or even 500 million, we're going to be getting in the 60 to 120 and maybe even higher share price easily, right? If not higher than that. It probably would be higher than that because there's going to be hype, there's going to be FOMO, there's going to be innovation, there's going to be future stuff, there's going to be a ton of things that are going to send us higher. I think, right? It's hard. You can't predict the future, of course, but that just gives you perspective. 10 years from now or 9 years, less actually more like eight and a quarter years, almost like 8.5 years, basically. 9,000 or not 9,000, 900 to 2,000% is maybe what we could be doing if the base case scenario effectuates, which would be about a 63% CAGR for the sapphires installed. Nano nozzle comes out, diagnostic FDA approval comes out, any sort of unexpected huge thing, or lineaging growth, right? If this lineaging number is way more than 40%, if that's like 100, if that's like 60 or even 45, 50%. Any of those things happen or other things, and we're doing we're getting into the 5,000% range potentially. And I'm serious when I say that. Just look at Illumina's chart, man. We've got a market that is ripe for the taking, and we got the best product in the world that has no as I said, it's the best product in the world. It's proven that it does the best trade greater than 500 base pair detection than any other product or service in the world. That's as simple as it gets. Now, doing some quick technical analysis today. We are still holding above the 21 SMA. We're still in bullish territory. It's at 602 now. Price at 611. That's where we closed at. We need to stay above this. And your day trade opportunity is that. The 21-day SMA, we already confirmed it once. This has acted as a very, very nice level of resistance and support in the near past, in the near term in history. So that is your buy point. I would not be surprised at all if we get a strong bounce off that. We'll see, and we're also the ascending level of support here. We're also nearing that. So yeah, support's left and right. If we're gonna really dip, 596 tomorrow, and if we're gonna dip a little bit, $6 flat or 602. Quick wick down below the 21 SMA, possible, not likely. I expect that to hold unless the market crashes or some shit, right? And with that being said, here's the portfolio. If we can do this. Nope, that's not right. Nope. Try it again. All right, there's the portfolio. Thank you so much. Feel free to check out Newsweed. Newsweed's YouTube channel and website is going to be in the description. He's our sponsor. They are our sponsor. Feel free to check out newsweed.com. Thank you so much. It's not financial advice. I'll see y'all in the next one.